How's it going, folks, and welcome back to the channel, where today we're going to discuss the tariffs imposed by Donald Trump, or the United States of America, on about half the world and how they're impacting financial markets. So we're going to go over Bitcoin, gold, the US 500, oil, the volatility index, which not a lot of people take a look at, 10-year yields or the bond market, and a little bit of news about how all of this started and what's going on. So for those of you that don't know, Trump currently has paused the tariffs or created a blanket tariff of around 10% on everyone during this 90-day time period, where he's looking to negotiate over 100 trade deals, right? Total 150 trade deals. And right here we see CTV News, what they're talking about when it comes to stocks, bonds. It's just kind of an overview, and I'm going to give you my view in a couple minutes. So there was a steep sell-off on Thursday, and right now stocks appeared calmer, so they bounced back up. Posted strong gains on Friday. Bond market is acting weirdly, so bonds should be falling or they should be rising, because as turmoil hits, people should invest in the safe assets that is the US bond yield. But currently, it appears that the market does not trust US institutions anymore as they did in the past. So it seems that the US yields are turning lower, which doesn't make sense, having in mind that there is a huge efficiency play coming in hand, with the Doge, Department of Government Efficiency. Whether or not you think Elon is crazy, it is a good thing to work on efficiency and destroy government inefficiencies in any market. So the reason for the bonds actually falling could be kind of a sell-off artificially created by the market, so that the big investors can buy into the US government at a really low price with an impending upswing in value. So this is something to keep in mind. I think the US knows what they're doing, but also China knows what they're doing, and I will discuss that in a couple moments. But the upward action in rates, as an analyst at Citi said, has been rapid in historical context and provided no comfort to investors looking for havens in turbulent markets. Look, guys, from what I've seen, every time there's a steep drop. So whenever COVID happened, we had a huge dip in the market, and then it went on the biggest bull run in the world. So whenever you see a drop that's unnecessary, for example, like the drop in US yields right now, which isn't really it's not really even that noticeable looking at the 10-year market, it is something to keep in mind. So not always does it mean when something's falling down that it's bad. It could also mean that there is something else at play, and that people know more than you do in the market, which usually these large institutional investors do. It's very easy to short an economy, just like it is to short a stock. So you can sell the price, put it down a little bit lower, and then buy in at a better one later on. So the oil market itself is trading like we're going into a recession. That makes sense. Worldwide, we pretty much are and have been since COVID, still battling the supply shortages and a lot of other supply chain problems. The dollar is at its lowest level in 3 years, which once again, necessarily, it doesn't have to be a bad thing for the US, for the dollar. It just means that the exports coming out of the US will now become more competitive on other markets, because the dollar is now cheaper compared to, for example, the euro than it was a couple of months ago. So right now, for the same amount of euros, you can buy more assets priced in dollars. So the US is kind of doing what they had planned, where they're making US exports a little bit cheaper, just like China has in the past 10 years. So China's exports are so tremendously cheap that China's majority of their GDP, or around 30%, comes from exports, because they're just so cheap for everyone to buy. Everyone chooses to buy Chinese exports rather than somebody else. And I guess the US is trying to counteract that. Now, during this trade war, what's happening with China right now is the fact that there is people have to choose kind of sides, right? You can either side with the US, you can either side with China, or you can be in the middle. And that's kind of what it's going to be in the near future. We have a big world power. We have the US. We have a big another world power, and all of the East, the BRICS relationship, and all of this political movements. Most importantly, countries will have to choose whether or not they want to partner and make stronger partnerships with the United States or with China when it comes to importing goods. So these trade deals, you best know that whoever's trading and making deals with the US, so these are two things to keep into consideration. The United States itself is a powerhouse of consumption. So it's the largest consumer market in the world. But China, on the other hand, is the most efficient exporter in the world. So as a country that's between these two, you gotta find an economic model that relies both on Chinese exports to be cheap and help your economy, and relying on the consumer market in the United States. So these trade wars and these tariffs and everything is not so much a bad thing, as currently what we see is, on the one hand, the United States trying to become more self-sufficient, imposing tariffs on these big companies, so that these big companies can eventually just make a foreign direct investment into the United States, move their factory there, and then produce, and they won't have any tariffs. So on that side, it's good for the US. On the other side, China will always be more efficient. And all of their systems are robotized anyways. So even though we have these two conglomerates or big countries acting as kind of against globalization, over time, I believe that all these trade wars will come to a level where the optimal efficiency is found, ideally, where we are able to use each other's resources as efficiently as possible. So that's my take on the tariffs. Which countries can be hit? You have a list here on BBC. You can ask ChatGPT about it. We have the EU, China. Currently, everybody has a 10% blanket tariff. China has a 145% tariff because those are the main, it's the main thing the US is trying to solve right now, and China also. So look at the market. We have Bitcoin that is, whoever says Bitcoin's dropping, Bitcoin's doing terrible. No, it's not. Come on, guys. Like just a couple of years ago, look, 2022, it was at $16,000. And who's going to tell me it's a bad, like, come on. I hear this so many times. Like, oh my God, Bitcoin's falling. No, it's not falling. It's still growing. It's tremendously higher. And what we can see is one of two things that could happen in the near future. We could be forming a reversal pattern and going down into fib levels somewhere around the 30K mark, which would be a good level to find it at. If Bitcoin keeps dropping, it would be a good idea to maybe dollar cost average between this entire area right here. So buy a bit here, 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 to get the lowest possible average price for the next time it potentially goes back up again. Now, I'm not a financial advisor. Obviously, always do it on due diligence before investing to anything in the crypto world. But that being said, on the other hand, we could just be making a kind of a flag pattern to keep going up. But I doubt that's what's going on. I think we are in for a correction. And if we take fib levels from the entire bottom of the Bitcoin chain, we will see that we are somewhere, we're looking at least for a retracement up into the 50,000 level, where we do have a strong zone going on, or if not even lower, into the 70% fib levels, where we have another strong zone going on around the $30,000 mark. Also psychologically significant. Gold is at an all-time high, which makes sense because of turmoil in the entire world. But here's the thing. There's a limited supply of gold in the world that you and I don't know what it is. Like, the market should know what it is, and we all should know what it is, but who knows how many gold reserves are somewhere that are hidden that nobody knows about. So that's one of the benefits of Bitcoin itself. But at the end of the day, because the total supply, but at the end of the day, both kind of a safe haven unit, both doing pretty well, and both something to keep an eye out on. Now, the US 500, what we can see is a market that's doing a little bit better than a couple days ago. We did go down, have a significant drop, and then we retraced back up. But looking at the grand scheme of things, we are still, guys, significantly higher than where we were before. So this was the crash of 2020 in COVID. The level was at $2,200. Currently, the SP 500 is at $5,400. So it's still tremendously higher than it was before, and the market is still in an uptrend. And what you could do is always just take the kind of bigger fib level picture, but I don't even want to do that. Let's just take a picture from the from the latest kind of retracement right here up into the newest high. We could expect a retracement into the 50% level, which was just hit, or into around the 61% level, which is a strong zone around the $4,500 mark. So I would say worst case, we're going down here. Best case, we retrace and kind of just like play around this area. When it comes to US oil, as we're saying, it's dropping down because it is a kind of a recession. This is a good thing. So I live in Canada and the fuel prices are lower. So, I can fill up my tank for less money. But we'll keep an eye out on oil later on. Volatility index drops, whenever it's below 20, it's a good thing. It means the market's in a positive outlook. Whenever it spikes up, it means things are happening in the world. So it's something to keep in mind and maybe tie it into your trade calculator to know when not to trade. So definitely I would recommend not trading when the market is too volatile, because you can just get wiped out very quickly. And when it comes to the yields, nothing too significant right here. As the CTV news source said before, we may be looking at yields that are supposed to be rising, but they're actually falling. But I have a feeling that this is temporary. So once again, not a financial advisor. Do your own due diligence. Drop a like if you enjoyed the video. Subscribe to the channel. Subscribe for more economics, and I will see you all in the next one.